So I'm going to teach you about resistance and support levels and how to take those trades where the market is on resistance or on the support key level. So for the first thing is to identify where are these support and resistance are located. So let me start with the support. Support is located at the lowest point where the market has reached and the buyers are rejecting the market to go to further pushes. So let me see, this is a downtrend move, and as usual the market, when it's going down, the market forms a kind of high, lower high and lower lows. Okay, so whenever the market is on a downtrend, the market will reach to a point where the market will fail to go further. Okay, so this is what we call our support. So support is located where the sellers are not able to push the market to downside. Okay, this is support. So whenever the market comes back down here, at this point here, we have buyers that are trying to push the market up. So one thing you should know, whenever you are trying to draw your support, you must look for at least two multiple touches. Yeah, first, second here, and the third here. So if the market rejects a key level twice, then that should be called a support. Why? Because we have a more stronger buyers here that are rejecting the sellers to keep on pushing, and the opposite to vice versa, we have a resistance to upside here. So let me change this to, so also to opposite to resistance. Resistance is that key point where the market is rejecting to go to further pushes. Okay, so whenever the buyers try to push the market to upside, the sellers get into the trade and then they reject the buyers to keep on going or to keep on pushing. So that are the resistance, sellers trying to push the market downside, and the opposite to buyers. Whenever they buy and then the sellers reject the market to go on forward. So using a market trend, so whenever the market is trending, so this is an uptrend, so as we know, the market creates new high and lower lows. Okay, so a broken resistance becomes a support. Okay, and a broken support becomes a resistance. Okay, so these are high highs and high lows. So the market moves in a series of ways. This is high and high lows, high and high lows. You can see this is a market structure, because using a market structure, the market makes high lows, high lows, and high and high low. So whenever you are using your support and resistance key level, so on this uptrend here, the resistance is located at this point where the market has made its high. Okay, and then our support is located at this low point where the market has made its low point. So this is the resistance here, and then our support here. So if you zoom, if you follow the market, understand the market structure, you can see that whenever the market comes back to create this support here, it must give you a double confirmation or 2 touches before the market can reverse. Okay, same to this key point here. The market will always give you multiple touches before it can continue to this correction move, going to retest the support. So let me show you some example on what I mean. On a downtrend move also, the market will make new lower lows and lower high. So those are the point you are going to pay eyes on. So this is a lower high, lower low, and lower high, lower low. So meaning that the market is on a downtrend, and on a downtrend market we only sell. So what I can see on this key level is whenever the market breaks the last lower low, the market, using the market structure, the market will come back to create a new lower low, lower high before it can continue going downside, and opposite to uptrend. Whenever the market breaks the last high, the market will come back to create a new high low using market structure, and then we can continue trading. So this is called a retracement or a pullback, or maybe we can call it a correction move. This is a correction move, and then this is a correction move or a pullback. So this is impulse move. So this is a correction move, and this is an impulse move. In an uptrend, you want to locate this impulse move for you to trading, and then whenever the market reach its high point, you exit the market, and then you wait for this correction move to end, then you can enter. So for example, you should be only entering those trades which are located after the correction move. So you want to only enter the trade setups when the market is on support. On an uptrend, you want to buy at support. So using market structure, if you know market structure well, you should get a lot of trades where the market align it together with the support and resistance. So using a good example on NZD-USD, I'm going to locate a good example of support and key levels, resistance key level. So in a 4-hour time frame, I use 4-hour time frame to identify my support and resistance. So remember what I said, multiple touches. You want to look them in a 4-hour time frame. So I have one swing low here, and then I have the second swing low here. So at the top, I have the first pullback there, and I have the second pullback there, and I have there another one. So let me mark it for you, then we can analyze it together. So remember what I said, multiple confirmation, confirm a resistance and a support. So you want to pick your tool, which is your triangle. This is a triangle, and then you want to mark those zones where you have multiple touches, and when it becomes to marking your support and key level, you want to mark around where the wick is between where the last wick has touched and where the wick started. When you want to mark your resistance, okay, you mark from the highest, okay, where the wick was, this shadow here at the end of it, and then you drag it to the lowest point where the market or where the body ends at. So that should be where you want to mark your support, your resistance. So at this point here, you can see we have the first touch and the second touch, that touch here. That is our resistance, because whenever the market is on a resistance, we sell back, and vice versa to a support. You want to mark to at the end of the week to where the market has reached to our support. The market was here at this support key zone here, and then the market pushed to the uptrend here, came back to make a new lower high. Using market structure, you can see that this is a lower high, lower low, and then the market break the last lower low here, made a new lower low, and then the market came back to retest and making it to become a lower high. So later the market pushed to the downside, and whenever the market pushed to come back to create a new lower low, the market also make our support. So we have the first touch here of our support, the second touch, and the third touch. The third touch, the market bite to the resistance. Okay. Also, I said that whenever the market break our support, this is our support key level here. Whenever the market breaks it, it turns out to become a resistance zone. This is our support. The market break down. It turned to be our resistance zone, and this is our support. So the market breaked, later came back in between that zone, and the market made it to become a support. So whenever the market will break it, then come back inside it, the market will test it before it can continue. Okay. So, and this was our resistance. Whenever the market was on this impulse move, you want to wait for the market to break it, to break the resistance, and then you want the market to retest it before you can continue on trading. Okay, this was if you can zoom back, this was a resistance here. The market was rejecting it, and in future the market came back, breaked it, and when the market breaked it, we are expecting that the market will come back to retest to this key level here, and then it can push up. But the market failed, and then the market breaked the support once again, retested it, becoming a resistance, and the market fall to downside. So this was a support here because of this trend here, a breakout and retest continuation. So the market came back to retest it, and then we had that impulse move. So whenever the market is on support, you tend to buy the market, and then when the market is on a resistance, you want to sell. Okay, so a support, a resistance broken out, became support here. The market breaked it, made a new lower high, and then the market pushed to downside, making a high low, and then the market continued going to upside. Okay, so the market move in a way of structure, and you have to understand market structure if you want to identify those support and resistance key levels. So you must keep on learning on market structure, and you will understand how the market works when it comes to resistance and support key level.